Good afternoon, everyone. My name is Tarshpreet Kaur, playing a role of Assistant Manager at Orion Capital. Today, I'm excited to present our comprehensive analysis of Sunrise BERHAD, a real estate manufacturing and export company poised for strategic growth and investment. I'm going to present some key findings from the company analysis. But firstly, I want to quote something. As once Neil Armstrong said, one small step for a man is a one giant leap for a mankind. This quote very much resonates with the Sunrise Behra journey. A small operational steps today can lead to transformative tomorrow. As for the introduction, our analysis centers on the Sunrise Bearers, a public listed Malaysian company seeking expansion financing, investment opportunities, and risk advisory services. Orion Capital has been entrusted to evaluate its financial health and strategic potential. As for the objectives of this analysis, the most important one is assessing its financial health and governance structure. We assess the company's financial health to make informed decisions. This allows stakeholders like investors, creditors to evaluate the company on meeting its financial obligation. It also helps in finding the areas for improvement. Second point, providing valuation and investment outlook. It helps in knowing the net value of the company in the current peak of the market. It also helps in assessing the goodwill and credibility. Third point, recommending risk management and portfolio strategies. It supports their sustainable and exponential goals. Tools and methods used to ensure a holistic evaluation. We employed a suite of analytic tools, DuPont and ratio analysis for performance matrices, DCF for valuation, Atman Zetsko for bankruptcy risk, forecast, and peer CCA for market benchmarking. These methods offer a 360-degree view of company's financial landscape. Operationally, Sunrise Behra shows a stable growth with net profit rising from Rm 560 million to Rm 568 million. However, administrative expenses has surged from 11% to 19%, which could outpace this revenue growth if not addressed. This signals a need for tighter cost control. Declining net profit margins. Despite higher revenue and gross margin, the net profit margin declined from 12.9 to 12.1. This reflects rising cost pressures and increased tax burdens. Additionally, longer cash conversion cycles compared to peers may strain liquidity, and if not managed proactively, it would highly impact the company's operational structure. High lease liabilities. Lease liabilities have ballooned from Rm 500 million to Rm 1.5 billion, indicating a heavy fixed cost structure. This limits financial flexibility, debt serving capacity, and we recommend evaluating a lease portfolio, consolidating locations, and renegotiating terms to improve the cash flow in the company. Currently, the stock appears slightly overpriced relative to its DCF-derived fair value. A low trading volume, a modest PE ratio suggests limited investor enthusiasm. Aligning the share price with intrinsic value could attract both public and private investors, easing the future financing for the company. Risk mitigation strategies we are providing to Sunrise Bharat. Diversifying the supplier chain. Relying on a limited number of suppliers exposes the company to disruption, whether due to geopolitical issues, natural disasters, or supplier insolvency. Expand the supplier base across the different sectors or vendors to reduce dependency and ensure continuity in raw material flow. Second point, adopt digital tracking tool. Manual tracking lead to inefficiencies, errors, delays in inventory and logistics. Implement ERP system or blockchain-based system, ensure transparency, reduce theft and loss. Automation to reduce human dependency. Third point. Labor shortages, human error, rising wage costs can impact productivity. Invest in robotics, AI-driven manufacturing, automated quality checks to streamline the operations in the company. Strengthen compliance and quality assurance. 4 point. Regulatory violence or poor product quality can damage reputation and lead to financial penalties. Establish rigorous internal audits, IOS certificates, continuous training programs to ensure adherence to global standards. Fifth point, hedging the financial risk using tools like VAR. Currency fluctuation, interest rates changes, and commodity price volatility can erode margins. Use financial instruments like forward option, VAR modeling to quantify and manage exposure to market risk. Prioritize ESG and sustainability to remain globally competitive. Investors and customers increasingly favor companies with strong environmental, social, and governance practice. Integrate ESG metrics into strategies, adopt manufacturing, reduce carbon footprint, ensure ethical labor practices to attract ESG focused investors and partners. We came to the end of this presentation. In conclusion, Sunrise Bearer stands a solid financial foundation with consistent revenue and strong margins. Yet rising costs, lease obligation pose challenges. By enhancing operational efficiency, managing financial risk, and optimizing capital structure, company can unlock new financing avenues and sustain long-term growth in the market.